Hi everyone, welcome to my channel. I'm Doris, and today I'm going to share with you about the updates for my stock account and the market updates. Today is the last trading day of the year, and I made a profit of $627. And I'm going to talk about the annual performance of this whole year for US stocks in general, and the performance for global stock market as well. As for today, in general, I still didn't buy any new stocks in. Currently, my account has 1,300 shares of SQQQ and 500 shares of DRV. Today, SQQQ rose by 0.28% to 54.01, and DRV rose by 2.55% to 53.96. We can see that since both of them are rising, it means that the market is not doing well, especially the real estate market. They are still suffering from the high interest rates. So the net asset of my account is 100,127.36, and today I made 0.7%, and that's $693.39. And next, let's look at the market. Looking at this industry heat map, we can see that most of the stocks are just fluctuating slightly today and decreasing a little bit. Dow Jones Industrial Average rose by 0.22% to 33,147.25, and Nasdaq Composite Index decreased by 0.11% to 10,466.48. And the S&P 500 index decreased by 0.25% to 3,839.5. All of the three major indexes for US stocks are decreasing. Friday is the last trading day of a painful year for US stocks. A volatile bear market, tricky inflation, and a series of sharp interest rates hiked by the Federal Reserve had hit growth and technology stocks hard in 2022 and hit investor sentiment hard. Let's take a look at the US stock indexes in general. For this year, Nasdaq Composite plunged by 33.1%. Dow Jones also decreased by 8.78%, and the S&P 500 decreased by 19.44%. All of this showing proof for the upcoming economic recession. Nasdaq plunged the most out of all three indexes, showing its heavy composition of technology stocks, which had been hit hard by the high interest rates of the Fed this year. Although 2020 is over, many investors believe that the pain is far from over, and this bear market will continue until recession hits or the Fed's policy shifts, and will continue to impact the market negatively. In the fourth quarter, Dow Jones Industrial Average gained 15.39%, ending 3 consecutive quarters of decline. It also reported its best quarterly performance since the second quarter of 2020. The S&P rose by 7.08% in the fourth quarter, breaking a 3-quarter losing streak. The Nasdaq, however, fell by 1.01% in the fourth quarter, the first 4-quarter straight decline since 2001. In the fourth quarter, the S&P 500's consumer discretionary and communication services sectors were the only two sectors to decline. The energy sector is up for nearly 55% this year, making it the only sector to rise this year. So far this year, the communications services sector of S&P 500 has fallen more than 40%. The consumer discretionary sector is down 37.4%, and the energy sector is up nearly 55%. Let's take a look at the S&P 500's stock map. Many of the stock has fallen by more than 20%, and some such as Amazon and Tesla fallen more than 50%, and these technology-heavy stocks are heavily hit by. However, if we look at the energy, oil, and gas integrated industry, many big companies in the industry rose by more than 50%. Part of this is due to the Russian-Ukraine conflict, and also the rising oil prices profiting the American energy industry. Experts believe that Only if inflation falls faster than expected, the stock market bulls likely to see a glimmer of life next year. But their chances of winning are slim. If the economy is too strong and there's no risk of recession, then the Fed will have to raise interest rates further. The key is how likely that inflation will fall significantly faster than widely expected. The Morgan Stanley Capital International World Index fell more than 20% in 2022 and is now on track for its worst performance since 2008 financial crisis, as the Fed's sharp rate hikes more than double the yield on 10-year U.S. Treasuries, which supports the global cost of capital. Bulls looking ahead to 2023 may find comfort in the fact that 2 straight years of decline are rare for major stock markets. The S&P 500 has seen only 4 consecutive 2-year declines since 1928. However, the scary thing is that when they do happen, the decline in the second year tends to be more severe than the first. Looking at the performance in 2023, analysts widely expect previously resilient corporate profits to collapse in 2023 as margin pressures mount and consumer demand weakens. The final chapter of this bear market is how the path of earning expectations, which are too high at the moment. He predicted earnings per share for the S&P 500 in 2023 to reach $180 compared with analysts' expectation of $231. Due to the rising recession pressure, the company's earnings will be shrunk, but yet the market did not factor in. Global central banks forecast. Optimists may point to the peak of the rate hikes on the horizon, likely in March, when money markets expect the Fed to switch rate cut mode by the end of 2023. A survey found that 71% of the world's top investors expect the stock market to rise in 2023. Experts expect the road to be bumpy in 2023, but believes that the Fed's pivot in the first half of the year could lead to interesting entry points. One risk is that inflation remains high, policymakers cannot be reassured, and the rate cuts are not realized. Models show a 100% chance that the U.S. economy will begin a recession in August, while central banks seem unlikely to rush to ease when the economy is in trouble, a strategy they have used many times over the past decade. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.